Hey everyone, Couch Investor back to another video for today. So we have to discuss something about SoFi because yes, as you've seen in the thumbnail, bad news. And it's actually news that if you've been following the company, if you've been following the news, political news around, you know it was coming. Unfortunately, we don't know when this will end. And I'm talking about the extension of the CARES Act. It should have ended in May. Now it got extended even more. So we'll discuss that. The stock is down around 11% in the last 5 days. Right now, pre-market, it's down another 4 to 5% or so. Bad news keeps on coming, and it's not just because of SoFi or regarding SoFi, it's just the general market right now. Inflation, yields going up, etc. Russia, Ukraine. So the bad news keeps on coming, and eventually, and unfortunately, it hits everything, but more specifically because SoFi has specific news with regards to the company that was negative, so it hits them even worse. So on Wednesday, the Biden administration announced that it will extend the pause on federal student loan payments to August 31st, 2022. And we don't know if it's going to stop there. Maybe they'll extend it even more. It won't really be surprising. Now, one of the main reasons why they might have extended that and why they might extend it even more is because of the upcoming midterms. So yes, I do believe, and SoFi's management as well, as we will see in just a bit, that this is just another political move. So with that announcement, SoFi's management has updated their full year guidance. So they gave us here an updated guidance for the anticipated full year 2022 financial results, following President Biden's directive to extend the federal loan payment moratorium from May 1st, 2022 until August 31st, 2022. Management now expect that a number of factors, including the impending fall midterms election, will precipitate a likely 7th extension beyond August 2022 by the administration. Accordingly, management's updated 2022 guidance assumes that the student loan moratorium will not in fact end during the course of 2022. So they update their numbers. SoFi's adjusted net revenue and adjusted EBITDA guidance for full year 2022 is $1.47 billion and $100 million respectively, a reduction from the previous guidance of $1.57 billion and $180 million respectively. Now for Q1, they maintain its original guidance of 280 to 285 million adjusted net revenue and 0 to 5 million adjusted EBITDA for the first quarter of 2022. Anthony Noto continues and says SoFi remains incredibly well positioned to drive continued growth in revenue, members, and products, along with continued and improving profitability, despite the fact that our student loan refinancing business has operated at less than 50% of pre-COVID levels for the last 2 years. Even with the assumption of no end to the moratorium in 2022, our new full year 2022 guidance represents approximately 45% year-over-year adjusted net revenue growth to $1.47 billion, a tripling of adjusted EBITDA to $100 million, and a doubling of margins. SoFi has done an astounding job achieving record financial results, member and product growth, and consistent profitability, despite the negative impact of the extended student loan payment moratorium. We will work diligently to continue that trend in 2022. So yes, while I agree this is a short-term headwind, and again, we don't know until when this will continue, but in the long term, this will become a tailwind because eventually it has to end. This extension will end one day. When that will happen, we don't know. Right now it's in August, but will probably get extended to another 3 or 4 months or so. So right now, short-term headwinds will probably create long-term tailwinds. And also the student loan, the loan segment of the business is becoming smaller. A couple of years ago, it was the biggest segment. Right now, it is becoming smaller because the other segments of SoFi's business are growing and growing fast. So that's great as well. I'm going to touch on the other segments, especially Galileo. Again, I'm going to touch on some announcements that they made in just a bit, but first, I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Now, Stock Advisor has beat the market by more than 4x. So all you have to do is go to fool.com/couchinvestor to get your free 10 stock picks now. Alright, so first of all, SoFi is now offering 1.25% annual percentage yield, or APY, on checking and savings account. They're saying here experience 41 times the national average checking rate. Before, that was 1%, and everybody was skeptical that this was just a marketing scheme, but right now they've upped their game to 1.25%. So why not have a checking and savings account with SoFi? This is what happens when you are a one-stop shop. You can offer such perks because you cross-sell your products, because you're growing with your customers, so you can be more flexible and offer things like that, something traditional banks could not have offered before. And then obviously I cannot make a SoFi video without talking about Galileo. I have to repeat it in each and every video because Galileo is going to be the biggest part of this long-term investment. So just a reminder, Galileo last quarter has reached 100 million accounts. If you don't know what Galileo's job is, it's Galileo's API is used to manage account setups, direct deposits, and a lot of other related features that customers have come to expect from fintech companies. And it's very important to note that Galileo was growing before SoFi acquired them. When SoFi acquired them, they didn't stop growing because, well, the competitors, which are still using Galileo, by the way, the likes of Chime, Robinhood, etc., are using Galileo because the service is so good. So although they are competing with SoFi, they are using one of SoFi's largest products because it is such a great product, and that's the strength of SoFi's business. So to conclude, yes, the bad news is that the CARES Act is extended for another couple of months and then will probably be extended again. But as you've seen with the guidance, management still very confident in their business. And as you remember, last year was the same story and they still exceeded expectations. So I expect it to happen this year again. Execution management here is crucial. Now, am I buying the dip? What am I doing? Obviously, SoFi is becoming cheaper by the day. I am going to add it to the channel's portfolio. By the way, if you're not following the channel's portfolio on stockcard.io, it's free to follow. Be one of the first 100 followers. Link will be down in the description below. We have been performing quite nice in the last couple of weeks, so give it a follow. It's free, and then the platform is great as well. You can have a free trial, and if you want to upgrade, huge couch investor at the checkout to get a little promotion. So that will be it for this video. Let me know down in the comments below what you've been doing with your SoFi shares. Have you been buying? Have you been selling? What do you think of this move? Let me know down in the comments below. And if you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And I see you all in the next video. Bye bye.